Welcome to the Real Estate Investor Summit podcast, coming to you straight from the smallest big town in Texas with your host, mentor, and owner financing master, Mitch, a.k.a. Be the Bank Steven. The possibilities of life without a J-O-B start here. So grab your pen and paper and listen up. Y'all just might figure out how to fail forward to financial freedom.
This is Mitch, and welcome to the Real Estate Investor Summit podcast. We're going to talk about tax planning today. There's a secret to making the money, but there's a whole other side. You got to try to keep that money. So we're going to talk about the other side of that equation, about keeping the money. But right now, we're going to say hello to a couple of our sponsors, and then we'll be right back.
Hey investors, are you tired of struggling to find financing for your real estate transactions? Are you tired of overpaying your hard money or private investor? Introducing Capital Connection, the world's first and only true source of sources. We at Capital Connection focus 100% of our efforts, time, and resources on finding the absolute best sources in the nation. We then connect you directly with those sources. It's really that easy. Please go here to learn more now. reinvestorsummit.com/capital. That's reinvestorsummit.com/capital. Remember, reinvestorsummit is all one word, .com/capital.
Are your payment collections falling further and further behind because you're too nice? Do you dread those collection calls? Is your account analyses being sent out each year? Is record keeping just not your forte? Let MoatNoteServicing.com stand between you and your payers and handle all these issues and more. MOAT, MoatNoteServicing.com, because you should be out making deals.
MoatNoteServicing.com, because you should be out making deals.
All right, welcome to the Real Estate Investor Summit podcast. I've got Craig Cody on the line. He is a certified tax coach, certified public accountant. He's a business owner and former New York City police officer with 17 years of experience on the force, all about integrity. In addition to being a certified public accountant, for the last 15 years, he's also a certified tax coach. And so as a certified tax coach, Craig belongs to a select group of tax practitioners throughout the country that undergo extensive training and continued education on various tax planning techniques and strategies to become, as well as remain, certified. And on top of everything, with this organization, Craig has co-authored an Amazon bestseller book, Secrets of Tax-Free Life. Let's say that again. Secrets of a Tax-Free Life. And so, Craig, how you doing today?
I'm doing great, Mitch. Thank you for having me.
I understand you're from Long Island?
Yes, I'm about 20 miles outside of Times Square.
All right. A lot of activity going on there right now.
Yes, there is.
So let's just get right into it. Like, what is proactive tax planning, and how can it minimize your taxes? How can you help us minimize our taxes?
Okay, well, what the difference between a proactive tax planner and your typical accountant out there is the typical accountant out there is very good at putting the right numbers in the right boxes, okay? Looking in a rearview mirror, okay, and, recording the history that's happened. When you do proactive tax planning, you make history, okay? You look for missed opportunities or new opportunities and tax strategies where you can save your clients money, help them keep more of what they make.
Well, and I'm a big advocate, and I wish I'd have been a bigger advocate sooner, because I learned in the last couple of years exactly how much money I was leaving on the table when I went from just a tax guy who did the CPA that did my tax returns to a strategist, which exactly why you're on the call today. I went the longest time running my business by the hair on the back of my neck, never really having a balance sheet, never really having a P&L, and I didn't realize how much that was costing me, and also the anxiety of that, not ever knowing what your tax bill is going to be, not even an idea of what it's going to be at the end of the year. I am embarrassed to say, but we're always transparent on this show. We say the good and the bad, the ugly, and I'll be transparent by telling you it took me 15 years to finally get in order and have my, I have like 5 or 6 companies that are all offshoots of the real estate business, from hard money lending to self-storages to the owner finance strategies, to even some buy and hold properties that I'm forced to hold because I don't really like being a landlord, but in some cases I have to be for a while at least. And I was amazed at some of the ways that I had been overlooking for years, thanks to strategists like yourself. So that's why I wanted to have you on the show. What is the biggest mistake you see small business owners making regarding taxes?
I would say choosing the wrong entity. I mean, obviously, after not planning, the next biggest mistake would be choosing the wrong entity for their business. So people that have real estate in corporations, you see that quite often, and then you see them in C corporations versus LLCs, or not putting them into an entity at all.
Yeah, and what about S election?
Well, that goes along with the right type of entity as far as a corporation goes, and typically we would not hold real estate inside of an S corporation. Okay, so we'd want to move it out and get it into an LLC, and the biggest part of that really has to do with down the road getting a step up in basis if the owner happens to die.
Yeah. Okay. So you do a lot of estate planning as well, or is it?
Yes. We do estate planning, and we kind of got into tax planning via estate planning because I guess it was about 8 or 9 years ago when they changed the tax code and they changed the exemption amount from $1 million to $5 million per person, effectively with discounts moving an estate to, it must be over around $15 million before they start paying federal estate taxes. So it really cut back on the amount of planning we were able to do. But then we went back and we looked at what we saved these individuals that we did estate planning on in taxes, and we saw, wow, we've saved them actually on an annual basis. We've also saved them a lot of money, and that's what brought us into the tax planning.
Yeah, I'm amazed at in my niche strategy of choice, the buy it and then with other people's money, and then owner finance it for around double to my end user, i.e. taking a down payment and collecting payments for 10, 15, 20, 25, 30 years. I'm amazed at how many people get themselves in pickles or in bad positions because there wasn't a will. Do you see that a lot?
Yeah, we see that kind of after the fact, or people that are older and they come to us and they've assembled a decent amount of real estate and they don't have a will. They don't even have an attorney. Sometimes they don't even have a tax planner before they come to us, and you just wonder. Yeah,
they could have saved. Really, you do a will, not so much for yourself, but to help put at ease the people that you love, because when you don't do a will, you leave your heirs or your family members with a huge burden, and I'm sure you've seen it.
Yeah, tremendous burden. Tremendous infighting, especially when there's a lot of money involved. I'm a big proponent of trusts to kind of minimize that aspect of the infighting. But a will is definitely better than nothing. Okay. But you're right. There's a tremendous amount of people out there that have no planning at all when it comes to their death.
Will you help people set up a will?
Yeah, well, we work with attorneys for that. We don't do any of the legal work, but even it kind of comes back to forming the entity for whatever they're doing. Is there needs to be communication between the CPA and the attorney, okay, and obviously the client. Okay, because the attorney may know how to do it, for liability reasons, and I may want it done a certain way for tax reasons, and we need to have a meeting of the minds.
Absolutely. It's a big world out there and a lot of law to read and to know and to understand. It's amazing to me how much there is in these tax codes. It's like trying to, I don't know. I'd rather hit my my thumb with a hammer than read some of this code. So God bless you guys. So, I get this question a lot. Maybe we can go into it just a little bit further. Explain to us more, like what an entity should be. Like right now, we have series LLCs in Texas. Is that getting more prominent around the country, or are you familiar with the series LLCs? I know they're rather new.
I'm familiar with them. They're not in New York yet, so we haven't seen a whole lot of them. But we're dealing with now a lot of investors across the country, and they're bringing them up. And some of them are using them. Some of them are feeling they're not that cost efficient to use them. But from what I know about them, it makes a lot of sense to use, at the very least, the Series LLC.
Yeah. Okay. Great. So, can you help people with the because you're a CPA, so my understanding is that you hand your CPA all your books and everything, but the step before handing you the books is you have to have books. Can you help people get their businesses? I had gone many years with not having a real system, and it took me a while to find a CPA that would help me back into my previous systems and straighten them out so that I was getting a P&L every month in a balance sheet, and it was real easy to put my package together for my CPA at the end of the year because I was getting that balance sheet and P&L every 30 days, and so then I just took the 12 and put them together and handed them to my CPA, and boy, did that make my life a lot easier. I also learned that I needed to check in before the end of the year. You do like a quarterly planning or at least semi-annual, right? What do you suggest there?
Oh, yes. Well, we believe in constant communication. So we have a couple different, everything always starts with a tax plan for us. And then when we go into the typical tax and accounting, we have clients that we do. If they're working with us, we're doing their bookkeeping with them. And then we have which actually probably our fastest growing service is our outsourced CFO services. And those are where clients are getting their monthly or quarterly P&Ls. They may have investors they're dealing with. So instead of having the controller or the CFO in the office next to you, you're hiring us and you're getting a team, you're getting a bookkeeper, you're getting a CPA for day-to-day activities, and you're getting me for the big picture stuff, which, typically if we're doing that, we're also doing the tax work, but we're not always doing the tax work. And like you said, that's giving the investor a lot of knowledge, okay? And it's knowledge that he can implement.
Yeah, and so one of the things I had to learn was how to look at a P&L and how to look at a balance sheet, and what was I looking for when I was sitting there staring at it. I mean, what are we looking for on the balance sheets and in the P&L statements to help improve our business?
Well, obviously, you're looking at your debt. You're looking at the value of your assets. You're looking at any depreciation that's been taken. Depending on the length of time you're owning these assets. Cash flow. A cash flow statement is typically, when it comes to real estate, a very important statement that you want to look at. Okay, because that kind of tells the story. Somebody told me a long time ago, it's all about the cash flow. All right.
Yep, I believe that. But it's all. So one of my mentors who had run big businesses, I was saying, okay, so I have this P&L, this balance sheet. I mean, I my eyes go right to the bottom line, see what I'm making. But I says, what do I look for in the body of all this? And he said, look for your biggest expenses, and that's where, see if you can cut. What am I spending the most on? Is there a way to do better here? Can we? Is it time to outsource this, or to get more of a professional, or is it time to just shop it again? Because one of my biggest expenses was insurance, and I said, well, what do I do about that's one of my biggest expenses? And he says, well, when was the last time you shopped it? And I said, well, I can't remember the last time I shopped. I just have this guy, and I just keep sending stuff to him every time I get a house or whatever. He says, well, you need to shop. And I said, part of the problem with me is I'm really loyal, but the job or the responsibility of a business owner is to make that business as profitable as you can. and sometimes there's some hard decisions. And but I went back and I said, okay, well, I'll just do this exercise. And I went out and started shopping, handing my policy to other competitors and asking them to tell me what they liked about my policies, what they didn't like, if they could do better, and could they save me any money. And amazingly enough, they saved me a ton of money. And so I really got perked up about looking at my big expenses and always knowing what they were, and always rechecking in to see if there's a way I can minimize those expenses even a little bit. Because just a little bit of savings can make a big difference over a lot of years, right?
Right, and it all goes to your bottom line, which is your pocket.
Yep, and so nobody really looks at the business like you, or can look at your own business like you. It helps to have the CPA right behind you, or the bookkeeper to help you. But the point of the bookkeeper, right, is just to organize and document your activity. Is that right, or is there other? Correct.
No, that's and obviously depending on the level of skill of the bookkeeper, that's why you need your CPA to have more of an in-depth look at what's going on. And you could see your insurance as a big expense, but then the question is, how do you delve into that to see, okay, what is that expense made up of? Okay, where is that money actually spent? And so you should. Communication is key. Being able to ask questions and have access is very important, okay? Because every dollar of savings is going into your pocket.
Yes, and so I have a question for you. A lot of people that are just starting out, I tell them, when you're just starting out, start your bookkeeping then. It's the simplest then. It hasn't been messed up. There's not a lot to go back and fix. Try to get set up right from the very beginning. To me, that seems drastically important. What's your comment?
Oh, most definitely. Even if it's just you're starting out with your first property and, you're keeping it in Excel, at least you're tracking what's going on. And at the end of the year, if you go to your professional at that point, he could, make heads or tails of what's gone on. At a very minimum, you should be tracking it in Excel. Okay. And, QuickBooks is out there, or there's so many outsourced, accounting services out there that you can use to help track all that stuff for you.
And so will your company help someone from the beginning so they're set up right? And most people think, well, I can't afford to now at this stage of my business. I'm just starting out. And I say, well, you really cannot afford to because one is someone has to put in the time, and your time, in our business, we don't make our money doing books. We make our money finding great houses at great bargains. And that's where the money is. And nothing happens until we find that great deal that we can capitalize on. And so I tell everyone, try to delegate off as much as you can. There's note collectors and note collection services, easy to get out. That'll keep a certain amount of that bookkeeping record for you. And then there's bookkeepers that'll just, the whole point is to categorize your checks right, and so that you can actually pull up a statement on a house and say, how much do I have in this house? For the longest time, I was asking my office, how much do I have in this house? And they were telling me how much I borrowed to buy it, but they weren't telling me, yeah, but you spent this money on the lawn, and you had to, fix the roof, and I didn't have all those expenses where I could quickly pull them up and see exactly to the minute what I had in this house. And that was early on. I didn't make that mistake for very long, but that was one of the big things for me, was being able to know exactly what I had in a house, because when I'm trying to make a deal to sell the house, I got to know this number, and I don't have time to go back and methodically by hand manually go do this stuff. So I think we use QuickBooks Pro is what we use here. And
right.
So when you first start out, your bookkeeping bill, you're not going to have the expense that you're going to have when you have a business that has 100 houses in it, right? So the bookkeeping bill will progress. So it's small when you're little, and it gets bigger as you get bigger, right?
Exactly. And, and doing it right from the beginning saves a lot of headaches down the road. Okay. And, just depreciation. And like you said, tracking the expenses, if you don't track them correctly, if you don't track them and you're going to figure it out at the end of the year, our, I guess, history is most people vastly underestimate the amount of money they spend on things.
Oh, absolutely. Incredibly. And the other thing is, if you're taking care of this one deal at a time as they're coming down the pipe, then your memory is much better. If you wait till the end of the year, it's impossible to remember the transactions and who that check really was for and what was it for, because, you know, it's a lot of transactions in the past, and I just find my memory is really good for about 30 days. After that, I don't remember anything.
Yeah, you're no different than anyone else.
Right.
And that's why you need to do it. Like you said, you need to do it, and you need to do it early, and you need to do it continuously, because next thing you know, you have 10 houses.
Yeah. And so do you guys help people with set up traditional IRAs or Roth IRAs or solo 401ks?
As part of the tax planning process, okay, those are some of the things we look at for people, and you know, as far as what they can do and how they can do it, and maybe we need to, you know, do some, you know, creative things with management companies so they can put away more money. You know, it really all depends. You know, people don't want to pay self-employment tax because they have all this real estate and rental real estate, but sometimes maybe it's a little bit better to pay a little bit of self-employment tax and pay a lot less income tax.
Yeah, and also I found that having a solo 401k, personally, I have a solo 401k with checkbook control so that I can write checks and not have to wait on the trustees, you know, if they're on vacation. You know, you only have to lose one deal trying to wait for your trustee in a Roth or a traditional IRA to give you the go-ahead. You lose one deal because you couldn't consummate it fast enough, pull the money out fast enough, and you lose $20,000, $30,000 of potential profit. You won't do that again. You'll
right.
say, that's what I did. I said, so how can I get more control? And I learned about the solo 401k, and last year the solo 401k saved me a ton of money because I was able to give myself up to like 25,000, 27,000, and my company could match it, and that was a write-off. You know, that came off, a certain amount of that came off my bottom line. And then my wife, who was part owner of the company, could do the same thing. We ended up getting like $107,000 moved out, which I think half of that came off the income because it was put into not a Rothized retirement tax deferred plan. But it was great that I had it, because it's too late to set it up when you need it by the end of the year. It takes a little while to set this stuff up, right?
Right. Well, you know, solo 401ks you can actually typically do till real close to the end of the year. Okay. We've actually had some set up because it's just basically you and your spouse. We've had some set up the last week of December, but now is the time to start doing that kind of thing. And then you have to make sure you have earned income and you meet all the criteria, and that's where tax planning comes in, to make sure that you have and you can do those type of strategies.
Yeah, and being able to have a phone number to someone who understands more of the rules to all these different things, be it LLC or a 401k, or how much can I put in my Roth, or how much can I put into my traditional IRA, is really important, because I wanted to set up my daughter, who's been working for me for 20 years, taking every transaction as it comes in, and doing all the paperwork for all the transactions as they go out, and handling the closings. And I wanted to set her up with a 401k, and for the longest time I thought, well, I couldn't because she doesn't have her own business. And then I just picked up the phone one time and say, well, I'm not going to stop at the first no. Let me just ask somebody who's smarter than I am about this and see if there's something to be done about it. And they informed me that I could give her a percentage of my company, and now she was, you know, when you have a solo 401k, and correct me if I'm wrong because I am not a licensed CPA, but as a solo operator, I could only pay out so much wages for the year, or I didn't qualify as a solo entrepreneur. But I had this one problem. The only person that was working for me that wasn't a subcontractor was my daughter, and she was knocking me out of being able to get that solo 401k myself. And so then it was brought to my attention. All I had to do was give her a small percentage of my company. She was now a working owner, and she wasn't an employee. And that changed my whole outlook on it, and I was able to take advantage of some stuff. So having that phone number to talk directly was very important to me.
Oh, yeah, and think what it saved you or saved her in taxes.
Yeah, and then we were able to get her a solo 401k as well. And I like to give bonuses to my people, but if I recognize that people aren't really good stewards of their money, then sometimes, I give them some money they can do now, but I like to give them money that they can put into their retirement plans. You know what I mean? So that they can have something in the future.
That's very good thinking.
So how often should a business owner communicate with a CPA? I mean, what is it different at different levels or what?
Well, obviously it is different at different levels, but monthly at the worst quarterly, all right. And then if you're a bigger business like you have operating, weekly, okay. We have certain clients that we have weekly calls scheduled for to go over certain things, all right. And then we have our typical monthly calls, and then there's some quarterly calls or meetings. But it also is important when you're thinking about doing something to touch base with your CPA to see maybe there's a better, more efficient way to do it. Okay, I can't tell you how many times people are want to gift the house to their kids. Okay, and it's a great, wonderful thing, but maybe there's a better way to do it. For establishing a higher basis in that property so they could depreciate it, and get a bigger deduction. So whenever you're doing anything like that, you should definitely communicate with your CPA.
Yeah,
I'm sorry.
No, go ahead.
But you can never have too much communication.
Right, and people think CPAs are expensive, and I'll just go back to the adage of ignorance is what's really expensive, and there's no way that we can have a handle on all the different hats that you have to wear in the creative real estate investing arena. I mean, you have to be the guy who finds a house. You have to be the guy that finds the funding. You have to be the guy who sells the house. You're responsible for the advertising and the employees and the signs being made and signs being put out and the telephone system and the insurance. And there's just too much to do. And to add, to try to become an expert in tax strategy by yourself is just ridiculous because it's like an ocean out there as far as I'm concerned. And having people like you that I can call and bounce things off of has saved me tons of money. How do you find people use CPAs most effectively to their advantage?
Well, when we work with clients, we put them on a flat fee, okay? Mm-hmm. So they don't need to worry about calling us and running up a bill.
Oh, very good.
So that kind of takes the anxiety out of it for them. And, we've been doing this a long time, and, nobody's unhappy with the way it works. They're not unhappy, and we're not unhappy. So it works for everybody.
So, Craig, tell us the name of your company and where you're located.
It's Craig, Cody and Company, and we are located in Manhasset, New York.
Okay, and then I have a link here, so if you want to learn more about Craig, Cody and Company, then go to reinvestorsummit.com/Cody. That's CODY. Make sure you put the CODY all in lowercase, and that'll get you where you want to go. Anything we need to add to today's segment, Craig? Or we could talk about this probably for years. So
just a couple of quick things that we see investors missing. They may sound like little things, but like I said, most investors are set up with single-member LLCs, and they should be taking advantage of medical expense reimbursement plans, which are Section 105 plans. So, investors have kids. Kids tend to need braces, okay? Braces are expensive. Section 105 plans allow you to write those braces off, okay? They allow you to write off other medical expenses that are not deductible. You can also, another strategy is hiring your kids, all right? We like to use the 11 to 12-year-old and up, but court cases show you can actually hire your kids at the age of 7. And that's a way to either pay for their private school or pay for their, football camp, etc., and make those expenses tax deductible.
Yeah, give them some chores and get them instead of giving them just an allowance and taking it out of your pocket, set them up on the books and write them off. Is that basically what you're saying?
That's right. And then the money goes into their bank account, and then the camp expenses come out of there or their private school, and you make those non-deductible expenses deductible.
Yeah. Unbelievable amount of things you can do that you just didn't know. You don't know what you don't know, so you get some professional counsel with a a knowing CPA like Craig and learn where you're missing the boat and where you can get some write-offs. You know, I just can't express enough how much I appreciate you being on the call. I like to keep it kind of short here, and then if people want to get in a longer personal conversation with you, they can go to reinvestorsummit.com/Cody. And I really appreciate you being on with us today. I know it was a little short, but I think these are the kind of topics that you really got to get personal with. And so I think we've given people enough incentive to want to do that. So the name of your book is, tell us the name of your book.
It's the 10 biggest tax mistakes that cost investors thousands, and that's actually real estate investors thousands.
Okay, and they're going to be able to get that at that link that we gave out, right?
Correct.
Okay, and then, but I thought I read the name of a different book that you had there. What was Secrets of Tax-Free Life.
Correct. That was an Amazon bestseller that I co-authored. It was Secrets of a Tax-Free Life. Surprising write-off strategies most business owners miss.
Okay, so this brings up a topic I want to touch on here. You know, during the recent election, some people were really bashing Trump because he paid very little tax for the amount of money that he made, or he zeroed out. And tell the listeners why this is not a sin, and just talk to us about that issue.
Well, you know, Congress enacted and passed the tax code, and there is no reason why we should not, you know, take full advantage of what the tax code says. And I'm not familiar with the exact quote, but many years ago, former Justice Rehnquist made a comment about that you know, there's nothing wrong, to paraphrase, there's nothing wrong about taking advantage of all the items in the tax code that allow you to write different things off and structure things a certain way.
Yeah, and so I wanted to make this clear to the audience. It's your right, and you're just operating by legal or acceptable practices to minimize your tax liability. And if that gets you down to zero, then good for you, great job. You know, as you start to make more and more money, it gets more and more difficult to zero out. But there's definitely ways to minimize. And so one time I had an attorney who, let's just say that we were on opposite ends of the political spectrum, and he had to be privy to my finances for a reason. And he made this statement to me. He says, you know, this is what I don't like about the Republicans or the conservatives or whatever, how he said it. It was that you guys don't pay any taxes. And I had to sit this guy down, who was a very smart guy. He wasn't, you know, he was not ignorant by any stretch of the imagination. He was a pretty well-respected attorney. And I said, look at it. This is how I see it, and I'd like your opinion on this. I told him, I said, look at me as a commission salesperson, and the department that we're working in is taxes. And so I think the tax code is cleverly set up to give entrepreneurs and people that are going out there without a net and creating business out of thin air of their own initiative. The tax code wants to encourage people to do that. And so when they go out and they start these businesses with no personal guarantee, with no federal money backing them, with no cheap government loans, and they go out there on their own, of their own volition, and start a company, one of the results of that is that taxes start being paid by, it creates taxes that people have to pay. If you're hiring people, now they're getting money and they have to pay tax on the money. You're buying product, there's sales tax and all kinds of, you know, tax. It causes trucks to roll and gasoline to be bought, and we all know how much taxes is in a gallon of gas, right? And you start taking, in my case, in my business, we take these crack houses in the inner city, dilapidated houses that have no tax value, no one's in them, the taxes are behind, you know, the property taxes are behind, and we start paying those taxes to get them current, getting that money out into the municipalities that desperately need them to function. And then we take these houses and we redo them and we put owners in them, and increase the tax value of that property where, I bought houses that were assessed at $20,000. By the time I got finished and sold it, it got reassessed next year at $110,000, and that's more tax money coming in. So I had to look at my attorney and say, what is it you don't understand? I am causing more taxation over years and years and years than I could ever pay out of my pocket from my pay. And they give me a break for that, for being that industrious. And he said to me, but you don't even pay as much as, my secretary paid more than you paid in taxes. And Warren Buffett has been quoted as saying that. And Warren Buffett is way smarter than he's leading on in this statement, because I said to my attorney about his secretary's tax bill compared to mine, just as I would tell Warren Buffett, that I moved more of an economy than that secretary. That I caused way more taxation than that secretary, and I am being rewarded for causing all those different taxes all across the globe for all those years that they're going to have to be paid. What's your comment?
I couldn't have said that better. Okay. You're 100% correct. You're the business owner is the one taking all the risk. Okay. Versus the person that has a job and gets a W-2 and, maybe pays some more taxes, but that person is not growing the economy. And that's the reason why businesses get tax breaks, and that's why the government wants, different businesses to stay in their cities and gives them tax breaks, because they generate money for the economy. So you said that very well.
I don't want to get in a big political argument here with anybody, but when people start to say, they give these corporations all these tax breaks, it's because they cause tons of taxation. They cause product to move. They cause people to receive checks. Every time someone receives an income check, then they have to pay tax. They just do so much for an economy, and I think it's what really grows the middle class, which is so important to the United States economy, is a great, vibrant middle class. And a lot of that middle class, if not a huge portion of that middle class, and correct me if I'm wrong, Craig, is from small and medium-sized businesses that no one even knows of.
Yep. I mean, you're correct.
So there's the politics for the day. Please don't shoot me, anybody. I know there's a lot of differences of opinion, but that's my angle on it. So you guys want to learn more and get smarter about how to handle your tax liability? Make sure you go to reinvestorsummit.com/Cody. Make sure Cody is all lowercase, CODY. And be sure to check out the book, Secrets of a Tax-Free Life, and also tell us about the other book. What's the title of the other book again?
The more pertinent book, I would say, with your listeners would be the 10 Biggest Tax Mistakes That Cost Real Estate Investors Thousands.
All right, you can find that at a link. It's kind of a lengthy title, but don't worry about it. Just remember, reinvestorsummit.com/Cody, and you'll see it all there. It'll be in the show notes, and you won't have to write that down. Craig, thank you so much for being on the show. I appreciate your time. It takes a lot for people to carve out an hour out of their day, and I appreciate that you did it.
Well, I appreciate you having me. This was a great experience.
All right, my friend, thank you very much. And this is Mitch, and we're out until the next Real Estate Investor Summit podcast. Thank you very much for tuning in.
You've been listening to the Owner Financing Master, Mitch Be the Bank Stephen, on the Real Estate Investor Summit podcast. Let us now blatantly, without apology, bribe you towards financial freedom by offering you a whole bunch of free stuff. Go to reinvestorsummit.com and get you some. And y'all come back now, you hear?